All right, I think we should get started. Thanks a lot, everyone, for showing up. Um, Hello, everyone, and a very warm welcome to the Harvard India Conference online debate series. This is a prelude to our flagship event that many of you might already be familiar with. And for those of you joining us for the first time, the Harvard India Conference is co-hosted by the students of the Harvard Kennedy School and the Harvard Business School. We have a strong legacy of bringing together leading thinkers and practitioners across government, business, and civil society to weigh in on some of the most pressing issues facing India. And while we contemplate the format of our upcoming flagship event, in the light of current circumstances given COVID, we wanted to use this series as an opportunity to continue engaging with our audience and leveraging our platform to encourage deep discussions while also celebrating the intellectual diversity that is so core to our identity. Now, before starting this discussion, I would just briefly like to go over some housekeeping rules. We'll kick off the discussion with opening remarks from our moderator. This will be followed by a 35-minute intra-panel discussion and 15 minutes of audience Q&A. We value audience engagement more than anything, and we hope that you will use this time to further probe the arguments made by our speakers. Please feel free to use the Q&A function you will see on your screen to post your questions. You will have the opportunity to upvote these questions too, so we would encourage you to utilize this function if you spot your question already in the list, as opposed to re-entering it separately. And the upvoted questions will appear on top of the pile. So feel free to add those questions anytime during this discussion. And now, without further ado, I would like to introduce our panelists for the day. Umang Bedi is the co-founder of Daily Hunt, India's largest local language content and news discovery platform. He was previously the managing director of India and South Asia with Facebook and is an alumnus of Harvard Business School. Rohin is the co-founder and CEO of The Ken, leading Indian news website, which is the face of new generation of journalism in the country. He holds an MBA from IIM Calcutta. And now I would like to invite our moderator, Anand Daniel, who has been investing in technology startups for close to 15 years now, and is currently a partner at Axel Partners, leading their investments in consumer technology and online marketplaces, to lead us through the rest of the event. Over to you, Anand.
Thank you, Kruti. Thank you for having me as well as Umang and Rohan on this panel. Very excited to discuss this important topic. As you all know, India in the last few years at least has seen a lot of the Chinese apps getting traction, quite a bit of traction, and as well as a lot of Chinese interest in the Indian startup ecosystem, be it in the form of investments or even getting involved with some of these some of the apps themselves directly, setting up large organizations here and scaling them. So it's been since the beginning of COVID, and then over the last few months, it's been a big evolution globally as well as in India, with some of the things that have happened, particularly on the regulation side. So that's what we want to discuss today and get perspectives from Umang, who's built one of the leading platforms, as Kriti pointed out, in the local content space, particularly on the regional content side, and Rohan, one of the more savvy and astute journalists in India. I love reading Ken and getting their mixed perspective. So I'm very curious and also eager to get the panel started quickly. And we're going to cover it in three broad sections, right? And then we'll go into the Q&A. So please put in your questions and we'll get to them in the last 15 minutes. But for the next 30 minutes or so, we'll cover first the Chinese apps and the ban. How does that impact the Indian startup ecosystem? That'll be the first section, about 10 minutes each. Then the second section would be globalization versus Atmanirbhar. Like how do we balance that? That'll be the second section. And finally, the capital aspects of Chinese
We lost Anand?
Yeah, I think we lost Anand.
The large back. Conglomerates not being able to. Sorry, you can hear me for 10 seconds?
Yeah, you're back.
Okay, so sorry about that. That's the bad traffic in Bangalore. I can blame it on. Not anymore, I guess. Yeah. So I was talking about the three sections. We'll first cover the Chinese app ban currently, and then the globalization versus being self-reliant on the India front. And the third aspect is the capital inflows. So without much further ado, I want to kick off on the first section, the Chinese app ban side. Let's start with that. What are your thoughts on how that's going to impact the Indian ecosystem? I want to go to both the panelists. How does that help innovation? Does it help it, curtail it? Your thoughts. I'll leave it open. So, Umang, you want to go first?
Happy to do that.
Yeah.
First, thank you, Kriti and Anand. And as always, it's an honor for me to be a part of this conversation under the banner of which I'm a proud alum. You know, as we touch upon some pertinent matters in our discussion today, I would like to take a moment to ponder first about liberty. You know, it's a very powerful word and at times misunderstood and misrepresented. Abraham Lincoln wrote a very popular all honor to Jefferson letter in 1859, where he remarks, the democracy of today holds the liberty of one man to be absolutely nothing when in conflict with another man's right of property. You know, he goes on to add that this is a world of compensations, and he who would be no slave must consent to have no slave. Those who deny freedom to others deserve it not for themselves, and and under just a God cannot long retain it. You know, amidst the geopolitical turbulence, the true meaning of liberty and its potential is unraveled. No one, and I would like to reiterate, absolutely no one should be a slave in thought, work, or opportunity, ever. I'm not surprised that the word is enshrined in the Constitution of the Republic of India, the world's largest democracy. The Constitution of our country actually aspires to secure the citizens of this great nation justice, liberty, and equality. And I'd love to apply these proven and established principles to our discussion today because I think they're really pertinent. What I love about justice and liberty is it surpasses political bias. You know, at this juncture, I'd also like to introduce you to Daily Hunt. As you mentioned, we're the country's largest content discovery platform serving Bharat, over 285 million users in 14 languages across 19,000 of the 21,000 zip codes in every nook and corner of India. We've built our business with fully indigenous state-of-the-art AI technologies built by Indian engineers. You know, in the past few years, we've faced competition from a lot of foreign companies, including those that were backed by two of China's largest tech giants, who claimed they had greater technology and much larger pools of capital than us, obviously. I'm really proud to say that without any protectionism, our tenacious team fought this competition really hard and decimated them, resulting into many of them shutting shop well before the Chinese app ban. So Daily Hunt's success and my personal ideals, which are owned by our leadership, our team, their ideas and their execution, and not by protectionism. Recently, as you mentioned, India decided to ban 59 Chinese apps and then actually added 118 more to the list. The government's notification, while it did not refer to China explicitly, it stated that it banned them due to questionable data security and privacy protection mechanisms. Several companies, including AliExpress and several Chinese handset brands, still continue to operate, which lets me believe that the objective of the app ban is protecting Indian citizens and ensuring their personal and private information is safeguarded. Although India could, through its right to liberty, as established earlier, decide to ban Chinese products and slash trade, it could even be construed as just. But I truly believe India is objective and balanced. I'd also like to point to a tweet directed at Anand Mahindra by the editor of Global Times. As you'd guess, propaganda mechanisms continue to subtly bicker at each other. It's an edgy moment, no denying. But on one hand, India is consistently a free market that offers opportunities for one of the most fertile entrepreneurs or markets in the world, right? The least it expects is those who are aligned with its best interests decently gain from those opportunities. I very closely relate to Mr. Mahindra's response to the instigation where he says, India Inc. will rise to the occasion. Second, on the point of Indian startups in your question, Anand, I would love to start by saying that I have a lot of respect for fellow entrepreneurs in this country. Being an entrepreneur in India is an act of either supreme courage or absolute foolishness, with all the odds stacked against you. The unit economics are relentless. There's a lack of safety nets. You're always competing with global giants. And there is a stigma,
of professional and personal failure that society labels ones with, right? I look at this time of the pandemic, the resulting recession, coupled with the China app ban, as a massive opportunity for Indian startups, right? Let me illustrate why. Since 1945, there have been about 12 US recessions, so one every 6 years. The last recession ended in June 2009. Using a simple law of averages, the next recession should have begun in June 2014. It clearly did not. Nor did it begin in June 2015, 16, 17, 18, or 19. Which means that the fact that a recession is happening today should not really surprise us. It's caught us unaware, but it shouldn't surprise us. What was never in doubt was that a recession would eventually come. All that in doubt was when. And it's really sad to see that it's taken the form of the largest humanitarian and health crisis of the century. My belief is you should never waste a good recession. It is possible to create value in a recession. In 2008, there were about 6,640 public companies with over $1 billion of market cap trading on the US exchanges, true unicorns, right? 9% of them, so about 550, created shareholder value at the end of the recession by June 2009 by growth in stock price or issuing dividends. And these were across diverse industries, not just online. There were gaming, there were appliances, mining, auto, retail, pharma, manufacturing. So it's really possible to create value in a recession. I think COVID is here to stay for at least another year. I think if you're planning for it till the end of 2021, you're probably doing the right thing. The real founders, in my mind, are going to emerge are the ones who have the courage to start a company, launch a product in dark times, because that's exactly what you should be doing during these dark ages, right? I love great times, don't get me wrong, but I relish and love the opportunities that the dark times provide. I always tell young founders, be courageous and never waste a good recession. On the concern of replication, a replication drive being fostered, my views are fairly simple. Innovation is about making the existing better. It is an iterative process that builds upon the existing. Think MySpace, Orkut, and then Facebook. Think GUI and the mouse from Xerox and Apple ultimately. Think Hotmail, and then the entire Google ecosystem with Gmail, right? Ultimately, the nature of the audience is always aligned to value. Third, as an entrepreneur, I personally am on a mission with my brother Viru to include 1 billion people in the nation's digital narrative. Empowered by Daily Hunt, we believe a social revolution around local language content is taking place. Our mission is simple: to empower 1 billion Indians to discover, consume, and socialize with content that informs, enriches, and entertains. And our intent is also clear: to create a third platform of choice via a thriving ecosystem of users, publishers, advertisers, and partners focused on local languages as an alternate to the duopoly, right? We're clear that we want to own the mind share, the time share, and the revenue share for local language audiences across our family of app strategy. In the last 2 years, we've witnessed significant growth, about 7x growth in our users, from 40 million users to about nearly 300 million users today. About a massive growth in engagement and retention. 45% of our users come back every day and spend about 30 minutes of time. And we've grown revenue 7 times. In March, we exited at about $121 million, growing 100% to over $220 million this year. Since March, since we went into lockdown, disruption has hit traditional print and news businesses. Print publications, including national dailies, had to pause printing. Distribution of newspapers wasn't happening during a time when people needed the information the most. The growth was obviously evident in the digital side of things, and we were beneficiaries of that growth. And along with the app going truly social, where our consumers were just consuming content, are now transformed to being creators and curators and conversers on content, has further helped catalyze growth. But for the whole team at Daily Hunt, the priority has been on building a product that helps serve people's immediate information needs. That's been our sole focus. Hyper-local news, local information on COVID, working with a number of state governments across districts, collaborating with the Niti Aayog on building out Arogya Setu, right? In the recent COVID times, I think the Honorable Prime Minister has called for India to become Atmanirbhar across sectors of industry that imposes bigger responsibilities on companies like us. At Daily Hunt, we announced a big commitment to this cause. We were experimenting with short video because we wanted to own the mind share and the time share of local language users. And it was an opportunistic time where a couple of these apps were banned in India, right? But we've proven with our diligence and our AI and our strength as a company that we've battled off foreign competitors. And we're really proud to announce a new app that we've launched called Josh. Our short video app, proudly made in India, is Bharat's fastest growing and most engaged app. I tend to think of Josh as a Mahagadbandhan or a mega confluence of the country's top 200 plus creators who have an overall user following base of over 300 million on social media, and creator tools along with the best music labels in the industry, the hottest entertainment format, formidable user demographics on the largest local language platform. And we've been seeing some amazing growth. In the first 45 days since launch, it's been amongst the top 3 apps on the App Store, has had over 50 million user downloads. Today has over 23 million people coming back every day and spending about 21 minutes of time. And daily video plays are over 1 billion, right? Trending at 30 billion a month with over 5 million people creating content. At this rate of growth, we're really optimistic that in the next 60 to 90 days, we expect all of Josh's numbers to double. Cross 100 million MAU, 50 million DAU, 40 minutes of time spent, over 8 billion video plays a day, at 250 billion video plays a month, with over 15 million users who are creating content. And so the way I'd like to summarize this is, I definitely look at this as a boon or a tailwind that startups need to capitalize on. Not only startups, it's also public listed businesses, because I think this is the single biggest opportunity that presents itself. You have to make use of a good recession, right? And I'll just pause there. Rohin, over to you. Would love to hear your thoughts as well.
Yep.
Thank you, Monk.
And so for speakers, we'll mute when we are not speaking, just for the ease of the audience.
Yeah, I had to realize.
Rohin, over to you.
Message me that. Thanks for that, Anand.
Rohin,
and thanks.
Yeah, sure. Rohin, over to you. Welcome. Yeah.
Thanks. Tremendous stats, Umang. Congratulations on that. I'd like to essentially go back. We'll come back to some of these points that you discussed, I think, subsequently. But from my side, I'd like to kind of start by, with the topic itself that we're discussing, right? Indian policies towards Chinese apps and investments, tailwinds for startups, right? I have an issue with that entire, statement. And I know that all of us had kind of arrived at that, right? And here are my issues, right? A, there are no Indian policies. The app bans, we've had 3 app bans so far. There are no policies. There have been 3 press releases. There have been no formal policies. And each of those press releases, like you've said, have effectively said the government has heard complaints from various sources, that some apps have been surreptitiously transmitting user data to servers outside India, That's a severe threat to the sovereignty and security of India. And in this method, and through 3 press releases, we've banned whatever, 150, 60, 70, 80 apps. Coincidentally, most of which happen to be Chinese, right? So A, the app bans are not policies. B, they don't actually ban Chinese apps because nowhere do they explicitly say it's about China. C, about investments. Again, the Indian government has not done anything towards Chinese investments. All they have said is that all FDI, foreign investment into India, that comes from countries which have a land border with India, must necessarily go through the government for permission. Once again, China is not the only country with which we have a land border. So again, like with apps, it's like with investments, there is no explicit mention of China anywhere, right? And lastly, tailwinds for startups, right? Like by startups, I assume we're talking about Indian startups. And once again, who is an Indian startup? I don't think many of us are fully clear on what that means. Because currently what's happened is, once again, I'm sure all of you folks know, after we banned startups, the government under its Atmanirbhar policy was trying to figure out how do we encourage Indian startups through competitions, etc. And a bunch of startups came and could not take part because, hey, they did not have 51% shareholding from India. So now what we're trying to figure out is who exactly is an Indian startup, right? And, there have been policies, like people have been talking that there'll be a 5-point grading system where you get 5 stars if the founders are in India, if the HQ is in India, if taxes are paid in India, if the IP is in India, you get 4 stars, otherwise, etc. So my point about this entire statement is that we don't really know anything about this. There are no policies. China is not mentioned anywhere, right? We don't know what Indian startups are. We're essentially ascribing meaning to a different set of policies that the government itself does not ascribe meaning to. It's completely arbitrary, opaque, and bereft of intent as stated by the government, right? And we are now trying to reverse fit some kind of a larger plan to that and saying, hey, it's part of this overall policies. We're creating a construct that even the government insists does not exist. For instance, who's to say tomorrow if the government gets, quote unquote, complaints from various sources that data from the Ken is being transmitted to servers outside India? What could those be? Perhaps that's Google Analytics. Perhaps Daily Hunt is transmitting user data to servers outside India. Who knows? Do you know what those policies are? We don't know. Do you know who complained? We don't know, right? So let's not try to over-ascribe some kind of policies to this. Let's just understand this is completely opaque, arbitrary, and I would say, till such time that the government comes out with some kind of formal policy around what it's trying to do, only then can we actually say, hey, look what their intent is. But otherwise, right now, we're going from threat to the sovereignty of India to, investment from neighboring countries to Atmanirbhar. They're all distinct, right? So that's my only submission. We'll come back to this later as we go on.
Rohan, I want to stick with you. Maybe quick follow-up.
Sure.
So your points are true. So it's not policies, but still these apps have been banned. And the number of new startups that are coming up, which are in the space of where Chinese apps used to be, is like going through the roof, lots happening. So let's stick with that, right? So the question is, from an innovation point of view, is that a tailwind or what's happening? What's your view from observing the startup ecosystem closely? And then I'll come to Umang, right? How should we look at that?
Sure. When you say a lot of startups are coming up to take advantage of this, now, you've created a vacuum artificially, right? Through a set of policies, but you can hear me, right? Because I'm getting an
it's
message
clear.
saying that, no, the system is giving me an error message. You've created a vacuum in the middle of an ecosystem. And obviously, ecosystems and nature abhors vacuums, and people will rush in to take advantage of that. And that's great, right? What happens next? How many times are you going to create more vacuums again? What's the larger policy here? Sure, we created this. Like, are we essentially going to now say, hey, we banned TikTok so a bunch of TikToks can come in? Is that going to be a policy to create more local players over the long run? And really, what happens when these local players want to raise funding now? Now, under India's current policy, a lot of this would fall into quote unquote, and of course, Daily Hunt itself, I'll come to that later, would be categorized as digital media. We limit foreign investment in digital media to 26%, right? Have we thought about that? Are we just saying that, hey, let's just think about this moment because we have capped off some competition and new companies will come and we'll worry about the other problem of how to treat those companies later? Unfortunately, that's not how you build an ecosystem for the long run, right? It requires the coming together. It requires how you arrange for capital. Where is talent coming from? What is the market opportunity? What are the policies explicitly, clearly, transparently, so that people can plan around it? You don't just create, it's the equivalent of, hey, here's a black hole, take advantage of that. Now we don't know what comes next in 1 month, 3 months, 1 year, but let's just hope it's not going to affect the rest of us, right? So my only point is we don't know what's going on because, sure, we can take advantage of this in the moment, but we don't know what it is, right? And to your second point about a lot of startups are taking advantage of it, I'll go back to that same point, right? I mean, I'm sure you're aware of the fact that a bunch of startups and apps are saying, hey, we want to be classified as Indian, but we're not because we've got foreign investments. So what do you do about that now? So now we're trying to figure out how do we classify startups as Indian, right? So it's just a cascading series of steps that just shows that we haven't thought this through. We're trying to do this on the fly. That's my only submission on this.
Got it. So, Umang, would love your thoughts on the same topic, right? So there are 2 points made. One is the policies are not very clear. So how do we plan with that? And then the central question of, is this a tailwind for new and the startup ecosystem from the point of view of innovation?
Yeah, I think just a couple of points there. I think India is complex, right? One answer won't fit all, right? It'll require a complex and a long drawn response, which needs to be thought through and well planned, right? The lack of policies is at times a lingering problem. And it's now definitely an opportunity to clean up the backlog of corrective action that is needed, right? Startup India was a start, and now is an opportunity to roll out an elaborate rollout of policies, right? But just coming back to whether this is non-inclusive or inclusive, or whether this is anti-globalization in terms of an image, or what is Atmanirbhar Bharat, right? I think to the point that Rohan was also making, I think I found some interesting data points when I was, looking at a report which a Mumbai-based think tank, Gateway House, explained, where there are actually 4 types of Chinese apps functioning in India: apps with economic viability, vanity apps, apps with nuisance value, and finally those which are used to push Chinese propaganda. Now, these are not my words; these are those of a credible, objective think tank, right? So clearly, there is some merit in the whole matter, right? For now, we would go by the information we have in the public domain. And, Rohan is right on one point. There is not too much information out there. And by that means, it's a fight of data sovereignty and a legitimate storage of information in Indian geography, right? But the debate isn't new. In fact, BlackBerry dwindled in the eyes of multiple governments around the world for the same reason. And hence, I wouldn't go the full path to attribute this to being non-inclusive. I think some of the opportunities which are ahead of us, and I think one of them was pointed out by Rohan itself on capital, right? But there is a growing opportunity for India to emerge as the 4th tech hub in the world after the US, China, and Israel. The current situation offers tech entrepreneurs the opportunity to innovate and build better products for India and the world, right? Now, India is the 3rd largest startup ecosystem in the world. Over $5 billion was invested last year in about 1,500 startups, right? However, 80% of that money came in from outside India, right? And over the past few years, the Chinese have invested more than 4 billion in startups. In fact, 18 of the 30 Indian unicorns, right? What we urgently need is to become truly Atmanirbhar or self-reliant in startup financing. For an Atmanirbhar Bharat, we need domestic investors to invest at least 50% of this annual amount, right? Which is close to about $3 billion or 20,000 crores a year. Because as India grows, as our ecosystem grows, our capital needs increase. We must build a local venture capital industry, supported by the government, right? Having said that, a startup requires far more than funding. And let's just take a minute to appreciate the Indian market for the app ecosystem. India does not have a great firewall. It does not force Indians to only use Indian apps. It does not regulate news that the government approves of. That's a very powerful distinction when compared to what happens in China. We are free. And like any democracy, even the US or the UK, there could be dissent, right? Which is welcome. But from a startup and an entrepreneurship standpoint, all that is relevant is whether this fosters innovation. I'd like to ask you, Anand, right? How do you deal with a situation where you meet a neighbor who does not divulge much, but seeks to know more about you, your home, and your family, even clubbing in with your other neighbor and hurting your standing and your interest in society? Now, what would you do? You would reinforce your rights and establish your standing. If they're receptive, the message is clear and accepted. But if there are vested interests, then it comes down to some serious bargaining to arrive at a truce or a deadlock. And that is strategic outreach, right? It has happened for centuries and will occur as a phenomenon as long as nations exist. But one point that I want to make is you either have a true free market economy or then a level playing field, right? You can't have it both ways. Control and rule with an iron fist and then demand fairness. I do not have to explain how China has blocked foreign apps, content, and media to regulate information flow. So it's a bit of a surprise when that happens. Like I alluded to, on the Lincoln letter, if you will not be a slave, you must not consent to have no slaves, right? And, just be a little sensitive in the spirit in which I'm saying that, right? So China started off by cloning US apps and then began innovating. They were protected by national barriers while they were doing so. So there's no shame in whatsoever in getting started by cloning things that work. but then differentiating over time. But a major concern on platform control arises from the practices that Chinese tech majors function in a closed internet, right? Companies like Alibaba and Tencent have been enablers and beneficiaries of this ecosystem. And if they were to replicate this internet ecosystem in India, that can create systemic risk, right? But their deep involvement in Indian businesses goes beyond the usually talked about trade deficit in my mind. The Indian telecom sector that has been sought after by the Chinese OEMs, and in fact, the US and UK, and much of the developed world has shared concerns around this phenomenon. In the information age, telecom, like other public utilities, is critical infrastructure, which makes me think of the responsibility on us in dealing with the flow of information and user data and its impact on the security and safety of our society. I'll just pause there.
Yeah, I want to come back to the point you made about capital inflows and the need for local capital. But I want to just close out on this first topic. See, there could be entrepreneurs listening today, right? And then maybe 30 seconds from both of you or a minute on what is your message to them if they are going to be building a startup starting out now with just because of the vacuum, as Rohan put, or the black hole, right? So that has been created. What would be your words of like either encouragement or caution for them? Maybe a minute from each of you, and then we'll switch to the next topic, which we'll go with the capital one that you talked about. Rohan, you want to go first?
Sure. Can you hear me? Yeah, for a minute there, I got disconnected. My bad. So I'm an entrepreneur. I'm also a journalist, and I'm sure, like, you know, any entrepreneur, I mean, you never chase something which is ephemeral and which has been created artificially through an event that you could not predict, right? Because if it was created because you could not predict it and there's a bunch of folks running around it, you could try to take advantage of it temporarily, but it's perhaps never going to be a sustainable, right? This is the equivalent of, I mean, we know through VC cycles where a particular model is hot, then somebody's like, hey, this model is hot in China, let's create the India of X. And then you'll have 10 companies trying to create the India of X, right? And that, of course, like, you know, never ends well for all of them. Hopefully one or two of them become successful enough for the VCs. But for most entrepreneurs, it's not a sustainable, right? So at least from my point of view, it's if you're building a video app, please build a video app because you genuinely feel that you have a great concept for a video app, but not just because I want to build the TikTok of India before anyone else, right? Because everybody's trying to build the TikTok of India, and the largest folks like Daily Hunt and like, you know, Facebook and Times Internet have the capital and the reach and the tech to be able to do it much better than you probably can.
Hey, thanks, Rohan. You know, my advice to entrepreneurs at this point of time would be, if you have an idea that keeps you up at night, 5 nights in a row, and you have a clarity of vision in terms of what you want to do, the one problem that you want to solve, where you see a massive market need. Now, that market need could be a latent need, or it could be a need that has been vacated by someone, right? I would say go right after it, right? Go after it with your heart and soul, but you got to deliver. And I agree with Rohan there. You got to deliver on a unique product experience. It just can't be a me too, right? It has to have more value creation for the stakeholders in that ecosystem. When it comes to capital, you know, and Anand, you alluded to that. And so my guidance to entrepreneurs would be, get your product market fit right. I think the first thing you need to ask yourself is, why do you want to torture yourself? Why do you even want to become an entrepreneur? You know, Rohan is a great journalist, but, you know, Rohan knows he wouldn't be the same had he been reporting from China, right? I mean, we know that, right? So why are you putting yourself into this situation? And there has to be a deep passion to solve a really big problem, right? And so that's what I would tell them to do. Capital will follow great products, great companies. You build an awesome company, capital will follow you. There's never been an awesome product in the world that has failed because of lack of capital. And so that's my 1 minute guidance there.
Got it. Thank you. So on the note of capital, so Rohan, over to you. What do we think of the capital inflows? Again, you were clear that it's not a policy, but have you I don't know if there's new money that has come in
Sure.
or anything, right? That meets the Chinese, like it's from the Chinese capital inflows. While you were away, Umang made a point that out of 5 billion in the
Yeah.
last 5 years or 3 years, 3 billion was from Chinese money, or I don't have the exact data, or something like that is what Umang mentioned, right?
What I
But we all
mentioned
know
is,
that there's a lot of cap.
sorry, Anand, what I mentioned is
Sorry,
5
Umang.
billion.
Yeah.
5 billion was the total investment that came in last year, approximately. And if I look at the last 2 to 3 years, Chinese companies have invested about $3 to $4 billion in India across the 3 year period, 3 to 4 year period.
Across the 3 year period. You're right. So, without sticking to the specifics of the dollar
Sure.
amount, it's a substantial amount, right? So, that's not only the vacuum in apps, but there's a vacuum in capital also. So, what are your thoughts? How should
I
we
agree.
think about that,
Okay.
especially
All
the
right.
founders? Yeah.
Yeah. So I had a bunch of points, right? So I'm going to use this concept called reductio ad absurdum, which is we'll reduce this to the most absurd form of this thing. I'd want to ask, I'd start with, let's pick the three of us on the call, right? Let's pick Daily Hunt, let's pick Axel, and let's pick the Ken, right? So like I said, there's been a bunch of regulations that that target digital media in India. Daily Hunt has been on the radar for almost all the large media companies in India because it unnerves them, right? Because its scale unnerves them, because its growth unnerves them. And that's why last year the government said digital media cannot have more than 26% FDI. Now, Daily Hunt has raised, to my knowledge, roughly about $125 million. I'm guessing that they've easily gone past 26% FDI at that limit. I don't want you to answer that. You probably have. Daily Hunt has also raised capital from a bunch of foreign investors, including from Chinese investors like ByteDance, etc. ByteDance, Sequoia, Goldman Sachs, right? So if we are going by this entire construct of Atmanirbhar Bharat, where, hey, we need to protect local Indian media from competition by big, bad, well capitalized companies that are innovative and disruptive, I would argue that Daily Hunt is one of them, right? I'd also look at Axel, right? You guys are doing great in India. Last year, you raised your sixth India fund, $550 million, right? You probably have over $1.5 billion in India focused funds across your 6 funds, right? And you made probably $1.2 billion from just the Flipkart exit. Now, if you're talking about Atmanirbhar Bharat and the need to promote local capital and venture capital, I would argue that why are we allowing foreign venture capitalists like Axel to kind of operate in India and make all this money for their foreign LPs? We should not be doing that. We should be having only Indian VCs, right? So Axel should not be on this thing as well. Let's look at the Ken, right? We started 4 years ago. We're way smaller than both of you folks, right? We started with a very unique, distinct model where we write our own stories. We were India's first subscription-based company. We've since expanded to Southeast Asia as well. We've also raised a very modest amount of venture capital. We share a venture capitalist with Daily Hunt, which is Omidyar Network. We're well within the 26% FDI. But again, the point remains that the government, in its wisdom, feels that 26% is the most that a Daily Hunt can raise or a Ken can raise because it's detrimental to whose health? That's my entire point, right? A lot of these policies that are being created right now are not, is my argument, being created because we're encouraging the formation of local startups. It's really being done for the benefit of a bunch of incumbents, right? We can't call it out directly for fear of libel, etc. But in the case of media, I certainly can say that traditional Indian media groups are completely behind the reason why these caps exist, right? And if you look at sector after sector, you will see that's true, right? So let's move away from these 3 companies that we've talked about, right? Let me pick another sector that we've talked about recently, right? Which is the e-pharmacy sector. We wrote a story about it recently, right? Over the last 3-4 years, India has seen a tremendous explosion of e-pharmacies, right? Like the top 4 startups were NetMeds, MedLife, PharmEasy, and 1mg, right? And they were growing like gangbusters, right? NetMeds had raised over $100 million. Most of these guys had, right? And they were perhaps operating in a regulatory vacuum, but late last year, the government said that, look, this is all illegal, they can't operate, and they have no reason, right? So what happened effectively then? A lot of companies who were looking to raise money were suddenly like, look, this is illegal, we can't do this. So the investors refused to fund them. So what happened now again, right? NetMeds sold to Reliance, right? NetMed had raised over $100 million and it sold to Reliance for a majority stake for $83 million, right? MedLife merged with PharmEasy. And let's look, in August this year, we came up with the new national health policy, which said, hey, you know what? E-pharmacies will officially be part of this thing. So now you're seeing regulatory clarity emerge. But at whose cost? If we were saying we were promoting Indian startups, you can essentially look at the e-pharmacy space to see how the sector has completely changed now. Look at the new players who've entered now. Amazon has entered, Reliance has entered, Flipkart is about to enter, Apollo is there, right? So you essentially now have large incumbents with balance sheet capital who've entered the space, and the policies are now accommodating around them, right? So let's not really kid ourselves and say that all of these policies, I mean, if they are, I'm happy to give the government the benefit of doubt, provided we see some kind of a roadmap that says that, look, by doing this, we're going to encourage this, and this will happen next. We don't see that. We're essentially trying to reverse guess a meaning from something that happens because, hey, I mean, that's the only thing that's available and in the public domain, right? So, and I'd like to kind of end this by saying Daily Hunt, like I said, is a great company. And if you really ask me, who does Daily Hunt threaten? I would easily argue that it threatens India's largest media groups, right? It would probably threaten Times Group, which is India's largest, right? So Daily Hunt, for instance, has close to 300 million users. Times Group, Times Internet has probably 600 million users. Daily Hunt has Josh. The Times Group has Takatak, right? And just a few weeks ago, Times Group raised money from Tencent, which is a Chinese company, but the money came in via Tencent Europe, right? So now, if you're a startup and you want to compete against some of these companies, will you be able to afford the lawyers? Will you be able to afford all this fancy structuring that allows you to kind of raise money from wherever you want into subsidiaries, wherever you want? Of course you can't. I mean, I would argue that Daily Hunt's existence is a great net positive for consumers and India's media space. But it's artificially hobbled. It's not because we want Atmanirbhar. It's just because India's media groups don't want it to become too powerful, right? So that's what a lot of these policies that are going on around the so-called promotion of local apps is really disguised to enable, the building up of strength from larger companies that have balance sheet capital and then therefore can fund losses for a longer time, can come in and then that's what's happening right now, essentially, right? So that's my point. I don't think we have the data, the clarity of policies to be able to say, this is what the government is doing and here's the roadmap. Can anyone say what happens 1 year from now? I don't think any of us can. I'm sorry. That's my limited points there.
Thanks, Rohin. Firstly, I just want to say a huge thank you for complimenting Daily Hunt. We're a small company with 500 people, very, very talented, and love the fact that you categorized us with some of the largest giants in the industry. So really appreciate that. Thank you very much for that. So I'll come down to a couple of points that I had here. The first is, we at Daily Hunt comply with all the laws of the land, and we've always built our systems, our business completely in line with everything that we've done. The second thing that I wanted to state is I just wanted to pause for a second and come to this capital bit, but I want to contrast the US, China, and India startup ecosystems on this capital pool, right? The US, in my mind, is the holy grail of innovation. And what they're doing on a daily basis is nothing short of breathtaking. And that's because they have put in place what is aspirational as a concept to be an entrepreneur. It's okay to fail. It's a badge of honor. In addition, there's no personal liability for the entrepreneur. China is interesting as its startups are scaling massively, but let's remember, they're scaling in what is inherently a completely closed and protected environment. The Facebook of China isn't Facebook. The Google of China isn't Google. It's Baidu. The delivery hero of China is Meituan. The Priceline.com of China is Ctrip. If you come to India, the Facebook of India is Facebook, right? The Google of India is Google, right? And this creates a very different dynamic for Indian startups where it completely differentiates on the rules of the game. Daily Hunt does not create content. It is an aggregator of content, right? And the same aggregation rules apply to the globals, apply to us as well. But a couple of my other observations in light of the theme of some of the Chinese-led funding that has happened in private market side. And, Anand, this is maybe something that you should think about. A lot of the Chinese funding has gone into the startup ecosystem, which I agree with one point that Rohin made, has fueled the survival of a handful of companies, right? That probably don't have a business surviving. There are certain businesses that I consider in India, and they're widely accepted as unicorns or multi-billion valued businesses, but in my mind are truly valuations in search of a business, instead of a business in search of a valuation. It's very unhealthy when the same investor is marking up the valuation of each individual successive round and essentially marking up its own capital. And so there is a real margin that will be drained out of the system. I think it's interesting as some widely accepted winners will have to either find a way to fix unit economics or take substantial down rounds. I think that's coming, right? On the point of FDI and FBI curb from China in the framing of the policy of the land borders, I think what the Indian government has made very clear is its intent, that it doesn't want to have hostile takeovers of Indian companies by their Chinese counterparts. And think about it, the biggest takeover in the history of the US by a Chinese company is not in telecom. It's not in technology or oil, but something as strategically important as pork, right? Food is going to be the next sought after commodity in the next 20 years, right? A $7.1 billion takeover of Smithfield Foods by the Shunghua Group, which was supported by funds from the Chinese government. And that's what the Indian government is trying to avoid. I just say a couple of things, right? These are interesting times that we live in. Currently, there are too many cloudy affairs in the world. It's a choice everyone has to make. Do you want your business to grow at any cost, ignore responsibility, or do you want to do the right thing? Let's not forget that we have a democratically elected government whose term we, by the way, renewed with a bigger mandate. Now, some may disagree with them, but they have a mandate nonetheless. Good business happens when you comply with the law of the land, whatever it may be, right? From my experience, I very strongly believe funds and capital pursue exceptional products, amazing companies, and passionate founders, no matter where they are. The struggle is always to build a killer product, like sweet nectar, right? So the money bees devour you. So there is almost always a choice. Most entrepreneurs would agree with me that there is enough capital to sustain and grow. We're always wary about whom we take that capital from, right? But never does it make sense in my mind to go against the order of the day, the established norm, and the laws of the land. We're entrepreneurs out to build products and participate in the market. We're not activists. In case things aren't working out, we have a platform to address it with the government and call for reform, right? Anything else is activism, which may or may not be rooted in facts. So let me just conclude by something that I read the other day in the Washington Post, and it really struck a chord. It said, India believes in an open and neutral internet and supports multi-stakeholderism, but it cannot allow a situation where its openness is used against its sovereign interests and public security, undermining both its citizens' rights and democratic values. For a variety of reasons in my mind, from the fear of upsetting Chinese investors to concerns that democracy should not take recourse to bans and restrictions, there's been a limited political will on the part of governments to exercise any checks and balances. Platforms have exploited and gamed this dilemma, right? This has led them to consolidate a grip on information consumption and decision-making that is quite frankly denied to global platforms in China itself. It is with this regard that the decision to ban these apps, in my mind, crosses the digital Rubicon, and it does so in a way that it protects the democratic rights and the values of India's constitution, right? Finally, what I'd love to say is a country who wants to counter China's aggression with economic, democratic, and military solutions reflects the strength of a proud nation that is clear about its sovereignty, democratic advantage, and will to achieve its dreams without denying anyone theirs. China understands only strength. India, through its actions that extend beyond the military realm, in the digital domain is again doing the right thing to protect the privacy of its citizens. So I'll probably just end on this note to say that for all the reasons that I've shared, I think there is no better time to be starting up in India. You have the perfect storm, which is, unfortunately being created in the middle of a recession, and this China app ban. And if you can really build a truly innovative product, a fantastic offering that solves a big need, latent or blatant, right? Truly global companies can be built out of India. So I'll just pause on that note and back to you.
Thanks, Umang. Yeah, thank you. So we're already 5 minutes over in the Q&A time. So I want to switch to questions. There are lots of them. So I'd request the panelists to keep their answers a little bit sharper for the ability to cover multiple of these questions. So that the first question is still sticking with capital inflows. We've seen the greatest inflow of FDI capital into India in the recent past with our friends at Geo. 20 billion of investments are have rolled into the Geo platform in the last few months from Google, Facebook, a bunch of others, as you know. So combining this with the Chinese apps, how does Geo's push, and you could call it a monopoly, affect the startup ecosystem? So for the benefit of Rohan, who I think is going in and out because of technical issues, I'm just going to the 20 billion that's going into Geo platform.
I heard you. I heard you.
Yeah, okay, good. Yeah, great. So maybe Rohan, you can start us out, maybe 30 seconds from each of you. And there are lots of questions. So yeah. Rohan, start. Yeah.
You want me to juxtapose Geo's fundraise versus the China?
No. So the question was very specifically, Geo fundraise 20 billion coming in, combined with the Chinese app ban. How does that affect the? That's a big monopoly there. How does it? Yeah, correct. Yeah, sure. How does it affect the startup ecosystem?
If you really ask me, it's quite like it's clearly a zero-sum game, right? If you're looking at capital availability, and which were the two largest pools of capital that were available for entrepreneurs at scale in India. One, of course, was the American pool of capital, and the other one was the Chinese pool of capital. What we've essentially seen is now a cutting off of essentially one entire pool of capital, which is the Chinese pool of capital, right? And by the way, all countries have abilities to, to distinguish capital from control, right? So let's not assume that making capital available automatically means control, right? Just because Axel invests in a company does not mean Axel runs a company or controls a company. That said, we had the one side of the pool is cut. So it's a supply and demand situation, right? And then you have Geo, and we've seen sector after sector, we've seen the amount of capital that has gone into Geo platforms. And now we're seeing a bunch of those companies also invest into Reliance Retail, right? Already it started with Silver Lake. There's rumors that Amazon might invest. You're seeing essentially the coming together of companies, rivals like Google and Facebook, into a company which has never happened before, right? You're seeing GeoMart, which brings together WhatsApp. So what you're seeing is the coming together of tremendously powerful pools of capital, products, data, companies under one thing, and the cutting off of one pool of capital, right? Of course, it helps the large companies, right? Who it doesn't help is, I would easily argue, is the ecosystem and local startups. That's just my cynical view.
So I have a slightly different.
Umang? Sure.
Another quick 30-second different perspective. Every single startup in India has benefited from Geo disrupting telecom and data networks, right? Every single startup. And so all of us are beneficiaries of that growth. A lot of that investment that has gone into Geo has gone into their pure telco business, right? If you just think about all of that investment that's gone in, I would argue that Geo knows how to do this at scale better than probably any other company in the world. And I remain an admirer from a distance in terms of what they're doing, because they're helping connect and bridge the digital divide. What I think is an opportunity still, because Geo hasn't proven that yet, is they have a family of over 20 apps. Not too many of them are amongst the top 5 or the top 10, right? So that understanding of the consumer, the ability to build an app ecosystem, right, is something that Geo still needs to prove. And I think from whatever I've been able to understand, all the investment thesis was basis them being just the most amazing telco network, which is connecting India, the base of growth of subscribers, the profitable growth that they're driving, right? I still see opportunity because, you don't need that much money if you have a great product, right? I know of companies that have raised 3 times of what Daily Hunt has raised for 0 revenue, right? And we're 1/3 their base, and the revenue scale. And all I'll say is I still look at what Jio's doing as very, very positive for the ecosystem because it helps connect users. It helps connect 1 billion local language users, the rising middle class, who are going to be the next drivers of growth, right?
Got it. So maybe we'll try and take 2 more questions in the next 3 minutes. So currently, what can Indian startups learn from the Chinese apps, unicorns, and the ecosystem? Maybe the top things we can learn from them. Umang, you want to go first? Yeah.
I think what China has done well in terms of companies, at least the ones who are leading the charge, is they have developed 3 rights to win. And those are the fundamental 3 rights to win that have made them successful in China. None of them could export that to India. None of them, right? And I'll tell you the reasons. The first right to win is they have really invested in data science and sophisticated artificial intelligence and machine learning, reinforcement learning models, exploit algorithms, a whole bunch of things to really implicitly understand user preferences without asking for them, right? Just by consumption behavior. The second thing that they've been able to do is drive very deep personalization, right? And drive very, very deep personalization, which is very meaningful to each audience. The third thing that they've been able to do is bring in 1 billion audiences. And that's the point that I was making in my earlier point. You need those 1 billion people to come online to the internet, right? The internet today is 500 million people. It's 300 million local language users and 200 million English users. In the next 4 years, it's going to be 1 billion people. And it may be accelerated by Jio. But they've been able to bring that 1 billion user base online, but most importantly, monetize. So the 3 rights to win are the most sophisticated AI/ML, driving the deepest personalization, driving monetization of 1 billion users. And it's as simple as that, right? None of those Chinese companies have been able to replicate that in India. And I can give you names that have come in and lost that battle, including TikTok.
Got it.
While they grew users, they could just monetize. So those are the 3 things that I've seen.
I think those are 3 good points. So Rohan, maybe next question to you. What steps must the VCs and investors take to ensure continued involvement and investment flow from Chinese LPs? Is there any suggestions you might have?
I'm not sure I can answer that. I think that question's up your alley, Anand. What can I say? I'm just a journalist.
Yeah. Maybe then we'll take the next question. Yeah, I agree. It's not very clear what you highlighted that the policies need to be clear before we can walk that path, right? So the policies are not clear. Maybe another question around if you look at sure, go ahead. If you have a point, yeah.
My understanding of the policy is that it's pretty clear, is that the ultimate beneficiary owner has to be non-Chinese, non-Hong Kong, non-Taiwan. That's our understanding from what we've read, is the ultimate beneficiary. And I think you know this best, dealing with your LPs, but maybe you want to comment on that.
Yeah, so we don't have any like Chinese LPs, so I'm not in a position to comment on that, unfortunately. Right. So do you think the next question, do you think these actions might have an adverse reaction on Indian startups that do business or have significant supply chains in China? It could be tech startups like robotic startups or other high-tech startups.
My sense is yes. I'm not sure which specifically startups we are referring to, but if you look at any startup that's in a hardware or like in a space where physical goods need to be shipped, ultimately you cannot avoid or sidestep around China. We've already seen that playing out in the mobile phone space, where, for instance, India has this policy to promote manufacture of mobile phones in India, and over the years, though initially in fits and starts, but it's kind of gained steam, and we've seen more and more mobile companies set up and manufacture out of India, including Apple, etc. But we've also seen over the last 3 months, since the Atmanirbhar, self-reliance policies came in, that more and more of shipments of components have been stuck at customs, Because again, this is my submission, that unless we have a holistic system level view around policies, that look, you cannot say that we want to export but we will not import. You cannot say that we want people to make mobile phones in India but we will not make it easy to import components into India, right? So that's my entire submission, that when we look at this, I just say that, hey, let's just make mobile phones in India. It's great. So if you're a startup, and I think we've also seen examples of now, for instance, televisions being held up for this thing. So if you're a startup which is building, let's say, a smartwatch, and where do you think you're sourcing components from, right? So it's really I don't think we can expect all of these to be manufactured entirely in India anytime. It does not happen in any country around the world, right? Everything is a globalized supply chain. So I'm sorry, but it'll essentially come down to the local customs official who will just sit on your imports because he or she does not care what the policy is. It's like, it's an import and I'm just going to go slow on it because we're going slow on imports.
Got it. Thank you guys. I think we're already, I'm sorry, I think we're already out of time. I see Kriti here, right? So Kriti, so maybe the quick summary for 20 seconds is, yes, policies need to be clearer. So for the founders who are listening, I think it's important to not build things just based on ephemeral gaps in the market, but really pick ideas that have long-standing potential, right? So think 3, 5, 10 years out. That's a startup journey. That's what Umang and Rohan have been on, right? So don't do anything for short term. Plan for the long term policy, and unless policies are clearer. Capital, yes, there might seem like a gap right now, but as Umang pointed out, for good ideas, there's always capital available as long as you're building solid companies. And I think those are the two main takeaways. I'm trying to end on a positive note. You've heard the balanced view on both sides, which is great. Thanks, Rohan and Umang, for keeping us honest there, and really appreciate this effort. Over to you, Kriti. Thank you, guys. Yeah.
I guess as we conclude, we would also like to express our gratitude to both our speakers, Rohan and Umang. Thanks for your time and for sharing your thoughts. And a very big thank you to our moderator, Anand, for also putting so much thought and preparation into helping us uncover all sides of this fairly contentious topic. And finally, just thank you to all our audiences in India, US, and elsewhere who tuned in for the event. We'll be back in a week on Sunday, 20th September, with the third debate on the topic, is deregulation of labor laws imperative for the industries to survive the pandemic? And we'll be joined by Dr. Amrit Amirapu, who is a senior lecturer at University of Kent, Rituparna Chakraborty, who's the co-founder and EVP of TeamLease, and Dr. Ramaswamy Balasubramaniam, who's the founder of Swami Vivekanand Youth Movement and Grameen. Thank you all, and we look forward to seeing you again.
Thank you, Kriti. Thank you, everyone.
See you, everyone. Bye. Thanks.